Welcome to the Risk Reversal Podcast. I am here with a great friend of mine who's back on the pod. This is his third time in 3 months. That would be Dan Ives. He is the global head of technology research at Wedbush Securities. Dan, welcome back.
Oh, it's great being here. I look forward every time when we do these.
This has been a great sort of series that you and I have done over the last few months or so I hope we keep it up. You are fresh off the floor of the New York Stock Exchange. You were on the halftime report with our main man, Scott Wapner. You've made some really big calls over the last couple of months or so we're going to hit some of those. You got a new one, not a new one, but it's an extension of a theme that you've had with Tesla for a while. You've been very bullish on the name, and you didn't get shaken out a little bit towards those recent lows, but you definitely had some nuanced sort of calls about what the opportunity was going forward. We'll talk a little bit about Mag 7. We have an S&P 500 that's up about 25% off of those recent lows in April. The NASDAQ is up about 32%. That's the NASDAQ 100. And then you launched an ETF last week. Let's start there. It's the Dan Ives Wedbush AI Revolution ETF. Talk to me.
Yeah, I mean, look, the big thing for me is like in 25 years doing this, investors around the world, they're like, how do you invest in AI? And you're big, Nvidia, Microsoft, Meta. But it was very important to me to put an ETF together based on what I view as like my thematic and deep dive research. And we came up with what's the AI Ives 30. And really, it's a list of 30 names that I view as either first, second, third derivative themes of AI. Whether it's on chips, Nvidia, TSMC, the Hyperscalers, some of the use case names from Mongo to Palantir and others, Meta, autonomous, names like Tesla, the energy side like Aqua, that was one that's on there. But it's a dynamic list, Dan. It's one where like there's names that could come on, come off. But I wanted, when we were talking about an ETF, it's an ETF based on my research that captures what I view as the biggest transformational theme that I've ever covered.
Yeah, and so you've been very consistent on that for a couple of years. I think a lot of analysts in your sector were kind of late to identify some of the broader opportunity, the here and now. I mean, I know that they were focused on, let's call it the picks and shovels, and who are the early beneficiaries. A lot of the most innovative companies are in the private markets, right? They're not even in the public market. So the idea of broadening that out, what do you say to folks that say, oh, this is the top? Dan Ives, very bullish for many years. A lot of folks are calling for some sort of digestion, some sorts of evidence of, return on the investment that a lot of these companies have made. What are the use cases, that sort of thing? What do you say to that?
Look, and I get it. I get like skepticism. People like, oh, Ives doing this is it with maybe a clown face in there. Like,
come on.
No, but what I'm saying is, but look, I like hearing feedback, both good and bad, because you want to understand like how investors are viewing this. Look, and I get it, but look, my view, me and you have talked about a lot, is that like we're gonna be talking about NASDAQ 20,000, 25,000, but here's the difference. And it's something you've talked about. It's not just about like 1, 2, 7, 8. See, my view is like there's names today that are not viewed as like AI names. Maybe it's on energy.
Yeah.
Maybe it's on the consumer side. Maybe it's in healthcare. But more and more, as you start to attach those, I think the stocks, have huge runs ahead because we're talking about $2 trillion of spending next 3 years.
Yeah.
So that's.
What do we have cumulatively over the last 2.5? Nearly $1 trillion, maybe like 700 billion.
It's about
or something
600 billion, and I think there's about an incremental.
You think it ramps? Is that because we're hearing about sovereign AI? You just have this trip over to the Saudi and everything like that. That's the next leg.
That to me is the key because look, today you only have 3% of U.S. enterprises that have gone down the AI path. Right. So 3%, 0 in Europe, 0 in Asia, ex-China. So when you think about sovereigns, really they're just getting started. And look, and that's why, and I know we've talked about like names like Palantir. That's why I believe Palantir is going to be $1 trillion market because my view of like as sovereigns go down the path and more enterprises and as it goes more, I think global, there's companies today that they've only seen this piece. They're going to have so much more, and that's sort of my view of just the broader theme.
Yeah, I mean, there's some valuation traps. You mean, Palantir, you and I have now been talking about it for 6 months, and it's gone from $100 billion to $200 billion to $330 billion. And so, You've been very right on that. I have a hard time sometimes when stocks get disconnected from the fundamentals. And here's a situation where maybe the fundamentals are perfectly good, but trading at 80 times sales and 65 times next year, this is a $4 billion revenue base. You know what I mean? So even if it were to go to 7.5 next year, or something like that, it still doesn't make a lot of sense. So at some point there has to be some sort of issues. Do you worry? All right, so let's talk about stock picking based on your research. How do you just said you'll move some in and out. Who makes those sort of qualitative judgments?
And that's my own. So in other words, like it's the first ETF that's based on like actual analyst research. So my whole thing here is like, as I move in and out, the ETF, that's how that changed. And that's why what I love about it is like, it's a living organism. So in other words, like if there's a cybersecurity company that comes in here, maybe another one moves out based on all of our research. So I feel like it's a theme that it's not like it was a few years ago. It was like Nvidia, you own it, Microsoft, you own it. Now thematically,
will you catch some shit though from your clients? Let's say you have a buy rating on such and such, or you're underweight, let's say Microsoft or something like that.
Yeah. Now, right now, if you look at like everything matches. So in other words, like if I have a buy rating, that's actually in there. So it's not like there's a name where I'm like neutral on, but they're actually as part of the AI 30. But to your point, that's where it could definitely get like complex. But I think for me, it's just like, all the work we do gives me the conviction. So, and I've never been one that looks at like Microsoft being a good example. I've never viewed it like, even when like the stock was a treadmill, didn't do anything for a year and a half. It's like, oh, is it over? And you have a lot of downgrades. My view is like, you are in their backyard, in the enterprise, and this theme, Microsoft, if I'm like, unless we're totally wrong in the AI theme, Microsoft's a $600 stock.
Yeah.
Because it's almost, I view them hand in hand. I don't see how the theme could work without Microsoft working, just given where they play in the enterprise.
Right. If you think about it that's what I say. For the enterprise, and you think of their installed base, and you think of how easy it will be to cross-sell or upsell, you know what I mean? Totally. Enterprises who are behind the eight ball. I totally get that. The one thing I just say, if anyone is, looking at something like this and wants to be critical of it, you do the work, you show up every day, you're talking about it, you're very transparent. I'm going to give you all of that. You know what I mean? I think that's really important. It's not like you're doing a set it and forget it. And the other thing is, if you don't agree with it, if you don't like Dan and you don't like his work, have a ball, short it.
No,
you know what I'm saying?
Like, we'll eventually have other ETFs. There will be like ones that you could short me and all the, and like, because so the point is that like reverse Ives or whatever it may be. But look, Dan, it goes to your point. Like, we spend all of our time, like, it's not just passion and the theme, it's like doing the work.
Yeah.
So I feel like of course, you're going to be wrong on names, but to me, it's like, it's about the conviction level that gives me the confidence to do something.
Well, listen, I wish you the best of luck. It's a very innovative idea. I haven't seen one attached to an equity research
it's the first
analyst.
one.
Yeah, well, good luck, man. I appreciate you coming here and talking about it. All right, let's move to, we're not going to do the whole thing on the Mag 7. I promise. Let's talk about the fact that, the NASDAQ and the S&P, they're very close to their prior all-time highs. If you go back to, February 19th, the one thing I'll say is that, it's not as simple of a trade as it might have been coming into the year. Right now, we have 4 stocks in the Mag 7, Apple, Tesla, Amazon, and Google, that are still down on the year, which I think is kind of interesting. And so you have a NASDAQ, that is up 2%. The NASDAQ 100 is up 4.25%. The S&P 500 is up 2.5%. What do you attribute that to? Is it a broadening out of, multiple themes in the market? Prior winners are not going to exactly be the ones that lead us out?
I think it's like, let's just use Oracle and Apple as a good example. Okay, so Oracle just breaking out because now the theme is playing out in their install base, like in terms of everything Safra's done. So you're seeing massive multiples and all-time high. Contrast that, and we were there last week with Apple.
Can't get out of its own way.
It's one where it's like they are not in any way attacking the theme. They're not going to get any credit till they do. And it's a stark contrast to what you're seeing with the rest of tech. Take Alphabet as another example. From like all the headwinds in terms of the lawsuits, antitrust, is search potentially at risk because of AI? Now contrast that with what we're seeing in, let's say, like cybersecurity. Names like CrowdStrike. Like, that's a good example. Like AI theme attached. Look what's happened to. So I think it's also you can separate out between it's a broadening of tech, but I think also there's companies that are attacking it, embracing it, and running with it, versus others that are, a little backwards treadmill kind of like.
All right, let's talk about Oracle for a second. Then I do want to hit on Apple. So if you look at that gap that it had on Thursday, the follow through into Friday, opened on the lows, closed on the highs, both days on massive volume. And what that tells me is that, okay, they're thinking about what's the next leg of some of these other, like to your point about the broadening out, but Oracle's not that story in my opinion. Now, I get OCI, their cloud business is coming off of a low base. It's probably 15, 17% of their total revenue.
13%.
So they're 13%. So it's having greater growth off a low base. It's not a huge part of their total revenue base, but they're basically sopping up excess demand that exists in the space right now. So unless you think that the build out of, like, say, Microsoft's involved into it, Microsoft's going to pull back from CoreWeave. They probably are going to pull back from Oracle at some point. Nvidia is getting into the data center game, so they're going to sop up a lot of that. So is Oracle something that you think makes a lot of sense to chase here? Because it reminds me of what we saw with Broadcom back in December. They were finally able to talk about a TAM in custom silicon. This is all based on AI, and the customers that they have are NVIDIA's customers. Stock gapped up and then kept on going for 2 days in a row. But ultimately, that gap and all the folks that went into it, that was kind of part of the problem when people thought, okay, maybe this trade is taking a pause.
That's a good, because I kind of view you as like a tech, like historian, but like me and you have done it since late 90s. Yeah. So like we both have seen so many, right, in terms of like the context to compare. I actually think Oracle and IBM are similar, we're bullish on IBM because it's my view that, like, okay, at one point the party may stop. Like, it's like at one point in terms of multiple extension, you hit a quarter where next quarter is like in line, stock sells up. But to me, it's really, these are companies where I kind of view IBM and Oracle similar to how I view Microsoft in like mid 2023. Like, in other words, because of the install base and because of where a lot of these companies are in these AI sales cycles, I think it's one where these stocks, Oracle and IBM, work until they don't. In other words, like, I don't view it as one like music stops in the next week.
Yeah, and the valuations for those two stocks, though, always trading at a big discount to its peers in the market. And now they're not. They're trading, at a premium, which should make some folks worried if you have a sense of history.
If you have a sense, but also I could just tell you, institution. Look, I mean, I have a unique perspective, like a Wedbush, where I interact so much with retail and private client from around the world, but yet institutional as well. I could tell you right now, institutional caught way behind starting in April. So you're seeing huge catch-ups in a lot of them, and you know this world so well. Oracle is one where from even you could rationalize that as a catch-up sort of trade. So I think from an institutional perspective, especially when it comes to AI, I think you are seeing catch-up trades to Oracle. I think you're seeing with IBM. I think you're seeing with Microsoft.
Well, it's funny. IBM is basically up the same amount as Microsoft off the late 2022 lows. Why I'm looking at late 2022 is obviously the market bottom there, but you also had the release of ChatGPT. And so I think that's interesting. Oracle's up 200% since that time period. It was trading very cheap now it's trading kind of expensive. All right, let's go to Apple. So a day like today where we are seeing semis rage, we're seeing a lot of these adjacent AI trades rage. Apple is up less than 1%. It just can't get going. It's down 20% on the year. We know the reasons why. Will you think to be a bit contrarian in laggards like this or in a Google? Because again, might they attack the problem? We know that they're going to be attacking the problems, whether they're successful at it or not. both of those companies, Google and Apple, have tried. They've failed. They haven't really, maybe they're laying some sort of groundwork, but for Apple, it doesn't really appear that way.
Look, I'll tell you this. I mean, being there last week and being at so many Apple events, it was one of, like, you know, walking out of there, I'm like, what is going on? Because part of it is just like, I get close to the vest. Last year, huge black eye, mea culpa, right? Like, in terms of like
Never
everything.
seen that by Apple, by the way.
Never seen it.
Yeah.
So basically, they promised things. They had a significant backtrack on, okay? You get some like government scrutiny, Trump, all the other. But then it's like when it comes to AI, it's one like it's befuddling to watch it. Now, again, my view is like, do they have something up their sleeves? Finally, M&A, like, do you go after Perplexity? Like, is there something that they have behind the scenes where they realize like time's up? I do think like they're gonna have to significantly change. There's a window here for Apple. Look, the install base, it's the golden install base.
Yep.
The services is there. It's the Rock of Gibraltar. But for them now, there's a window here. I mean, there's a window for them to do something aggressive. Otherwise, like, I think you look back years from now and be like, that was Apple's opportunity to go after.
Well, I would say that anything they do right now, and you just mentioned Perplexity, and, you know, on this pod, I mean, Deirdre Bose and I were talking about that like a year and a half ago.
I remember
Deirdre. I was like, why wouldn't you just? They were raising money at $2 billion, and I hit a couple folks at private equity, or, you know, why wouldn't you just like do a $5 billion knockout bid, get the team, build it? When you see what Meta just did with this Scale AI, a $14 billion acqui-hire for all intents and purposes, now Perplexity's raising at $14 billion. Apple has never done a deal this size. Now you could say, you know, when they bought Beats, which was a dead bang loser, through something like that, on the market cap that it had then, it was still a rounding error. But right now, I wonder if investors would not like them making a $15-20 billion acquisition, partially because they don't have a lot of confidence that it's going to do the thing that they laid out in 2024, the WWDC. They're talking about this integrated into Siri, integrated into the device, and you can't just take a wrapper like Perplexity and put it really, for all intents and purposes, to start out as an app, right? Mm-hmm. You know what I mean? And you can't charge, you know, Apple users for it, right? Because that's the whole thing. They don't charge you for Google search on your iPhone right now.
But they're gonna have to do something, whether it's like start charging for advertising and get the data privacy. So that was the first time, like, so many developers that I've talked to for decades, that was the first time, like, walking out of Apple Park, developers like, what are you giving us? You know, and I think it's just clear the message they're getting. Now, look, do they care about people like me? No. But here's what they do care about: developers.
Yeah.
That's the one thing I'd say is, like, they care about developers.
So what was the vibe among developers? Because people forget, you know, the keynotes on Monday, and it's not the sort of keynote that they used to do. By the way, their videos were so cringy, like so cringy. Craig Federici.
And Cook was there for what, 3 minutes on stage?
It was just really bad. So I guess my question to you is, and I know this sounds ridiculous, because when you think about how well the stock has done, how the company has operated since Tim Cook came over, I think they've returned, you know, like over, I don't know, $1 billion in something like that to shareholders, which, $1 trillion to shareholders. Isn't that correct, between dividends and buybacks here? Man, that's crazy. But the company, the last big hit they had was AirPods. Prior to that, it's Watch. Both of those are not particularly interesting. And so I just wonder, Vision Pro, you could say, is a dead bang loser. You know what I mean? Like, ultimately, spatial computing will be a thing, but I'll take the over on that. So is Tim Cook on the clock here? You know what I mean? Look, some of those other guys, Q and Federici, have to be.
Well, no, some of those guys have. Look, I think the thing is that you talk about, like, wartime CEOs. You know, it's like Zuckerberg's a wartime CEO. Musk, like him or hate him, he's a wartime CEO. You know, like Sundar is a wartime. Nadella is a wartime CEO. Look, I mean, Apple needs a wartime CEO, and I think Cook. This is one of those periods where the status quo is not gonna work next 6-9 months. Like, they're gonna have to do something. A model change, an acquisition, something from a partnership perspective to change it, because I think the big worry is it goes back to developers. You go to OpenAI conference, which we were, you go to Google, you go to Microsoft, you go to Apple. It's almost like it's a little time warp, right? So I think that's the concern, is like it felt different. I feel like anytime it felt different, like I like Meta back in like 22, like late 20, it felt different. Now obviously like Zuckerberg like changed significantly, and obviously the rest is history. But this is a moment in time.
Well, it's interesting that you just bring up Meta, because if you think about late 21, when Zuckerberg was in the metaverse and they changed the name and they were spending like crazy, Reality Labs, and to your point, a year later the stock was down 70-some%, and he got the memo, right? Like so.
But also OpenAI. I mean, like, look, no one understands Cupertino and Apple Park more than Johnny Ive.
Yeah.
So when OpenAI, $6.5 billion, buys his company, look, that's the other thing, is like that is within Apple. No one understands the inner workings better than him.
Yeah. Well, he was also the heart and soul. I mean, like Steve Jobs used to call him his muse for all intents and purposes.
I mean,
but like that's the crazy thing to think about, is like there's no talent internally, at least that they have actually let bubble up, that could take over from Steve Jobs. And then if you think externally, I mean, the last CEO they had before Jobs was some stiff, you know what I mean, in the mid to late 90s. And was it John Scully, who I know, and he's not a stiff. He's a great man, and I mean that sincerely. But he didn't have the DNA,
the persona,
the entrepreneurial spirit, and the creativity, and the ability to just kind of take big chances. And you think about Apple, might they be on the precipice of one of the first kind of share loss situations as it relates to iPhone? Units have been flat, right? And so if there is
China,
some sort of
obviously is such a key.
Well, they're losing share in China. We know that right now.
As well as the irony with everything is that you're in spotlight in terms of Trump. In terms of I bring iPhone to U.S. I could argue even like Trump basically launches a phone that's kind of a little kind of shot across.
They're talking about that. It's crazy.
But even though it's like experimental, and it's a PR, it's a little like kind of at Apple. At Apple.
Yeah.
You have obviously DOJ and a lot of the pressure they're getting from a regulatory Google. China is its whole other issue, because they're trying to balance that, but yet they're moving to India. So look, this is a very complex time for Apple.
Yeah, no doubt. And obviously very similar for Google. On the Google search thing, we keep hearing about, all this challenge to their search, and no one could ever believe this would ever happen in the last 20 years or so, whether it's happening or not. And based on the results that they printed, 2 months ago, it wasn't evident that they're actually
and
like
it's not
losing
there
share.
Yet.
Yeah.
But also it speaks to like, I'm 50. Like the thing is like for people like 40s, 50s, that seems crazy.
Yeah.
To people like in their teens, tweens, it doesn't.
Yeah.
So it goes back to like demographically too, in terms of like AI from a search perspective. And that's why, look, that's another example like for Google. Like this is like put up or shut up time. Like this is the time for them to get aggressive.
Right. All right. So let's talk about Meta, because it's somewhat related in a way. About a week and a half ago, they launched some AI tools to give to brands. I mean, directly to brands to create AI generated advertising. Yep. You've just, this Cannes Lions is going on in France right now. Yep. Every advertising, operation in the world, whether you're an agency, whether you're creative, whether you're ad tech, they're all there right now. And it seems like there's been a snowballing effect of just the commentary around these ad agencies, and then specifically, the sorts of ads that are going to do well on social, the place where you kind of need to be if you're going to get some virality and kind of get exposed to the demographic that you're talking about.
3.5 billion users, right?
Yes.
Combined. I mean, that's Meta's.
So that's Meta, and they're doing that. And so thoughts there, because the stock today is up nearly 3% because they announced that they're going to be putting ads on WhatsApp. I don't know about you. I'm not an active WhatsApp user, but I've never seen the ad on there. And people have been asking for 10 years, how are they going to monetize WhatsApp?
No, I know. I mean, but it's another example of like, you contrast that with Apple. there's things that Zuckerberg and Meta are going to do that won't work. But it feels like they are, of any of, outside of Nvidia, like any of them, they're the one kind of pressing the button, like going to see how they could advertise. It feels like Zuckerberg, from an AGI perspective, like is going full sort of
All right,
black.
let's talk about AGI for a second, okay? So what does that mean to you? And whoever comes to that point, however it's defined, the competitors are going to say, well, that's not really AGI. So in your opinion, define what you think AGI is and how important it will be to the enterprise. Let's just say you are Microsoft Azure or OpenAI or, your AWS, Amazon doesn't seem like they have something. Google, you know what I mean? They're working toward. You got to think about the ones that are actually talking about it. I've read some stuff where people think it's total bullshit. Like AGI is not going to be a thing. And so what are we talking about when AI is as smart or as useful as a human, right? For the most part.
Yeah, I mean, and I'd say like Musk, right? That's a big thing that he talks about in terms of
XAI, yeah.
But look, and the point is like true AGI. I don't think you ever get there, right? But I think it just shows
like sci-fi sort of stuff, like AGI.
But I think it shows when it comes to like Zuckerberg is the one outside of Jensen. And you could say Musk, hate him or love him, maybe but especially Zuckerberg now, from a technology perspective, feels like the one like, hey, like on a warpath to get there. And what that basically means is like for Meta, given their install base, I could say from at least from like a valuation, you could start to now be like, okay, like, does this mean there's gonna be like a whole nother? Is it 10 billion, 15 billion incremental? Like, what could that incremental business be for Meta? So I think now you're going to start to see scenarios where it's like some of the parts, Meta, you could get to a 4-digit stock.
Yeah, but you're not worried, just if you think about Llama and where they are, Llama 4.
And Llama, they're very far behind.
I mean that. Then it looks like they're panicking with the scale AI a little bit, paying $14 billion for half the company. And
they're losing Google, obviously, as their huge customer.
Right. And so, like, you think about this is like, are they really driving a lot of the narrative? Maybe they're disrupting a whole heck of a lot in the advertising business. First, the kind of old state advertising business. I keep reading stories about WPP and Publicis and all these sorts of guys, and if they don't get their act together, they're gonna really have a difficult time. And it's really, isn't this technology in general about taking out the middleman, right? If you think about 100%. It, and so is Meta, like, where do you rank Meta? Like you just said, Llama's an underdog right now. It seems like,
and on the model perspective, Llama's nowhere near ChatGPT. I mean, because it goes back to open source versus closed source. Look, I think it's like Llama to me looks at like, okay, they went down that path. You don't win down that path. Right. That's one, like, you have a horse in the race and they finish like 6th. I think Meta has recognized, okay, that's not where we're gonna win. I think they're too far behind.
Why did they need like a foundation model? Like, why couldn't they have, like, if you think about it, Apple needs to integrate this technology on hardware, right? If you think about Meta, like, they got Meta AI and Oculus and stuff like that, but that doesn't really matter.
The reason they needed it is because even if it's the 5th horse or the 6th horse, their view is they need the whole, they need to own the whole piece.
Yeah.
So in other words, like, their view is like, even if it's not the best, they can't rely on a partner. They need to have the whole food chain. That's why I think they have their own LLM.
Okay, so let me ask you this, and that's fine. I mean, like, they repurposed a lot of the spend on Metaverse into building Llama, right? And then they've been basically able to kind of get the benefits for serving better ads and being able to charge more and that sort of thing. But here's a company that is expected to grow earnings this year 10%, 13% next year. Revenue growth this year 14%, 13% next year. Yeah, this got like a gross margin of 81 that everybody in the world would love to have. But the growth is not dramatic.
Sure.
And it's trading 27.5 times this year, 25 times next. So what do you pay? And here's the other thing. Sure. Does anyone give a shit if the stock market is trading at 21.5 times, okay, and growing at high single digits earnings, and you're Meta and you're growing low double digits and you're trading at, 5 turns over the S&P? Maybe that doesn't matter. I don't know.
I think I could tell, like, investors I talk to, they believe it's not about, I get this year and next year, they think if they're, let's say if there's a 25% chance that they're right, then Meta is actually an accelerating growth story the next 3 to 4. You know, it was like that growth rate actually goes 15, 17, 9. And then some of the parts, you actually now start to value it on almost.
But who values some of the parts, right? Like, I'm just saying, like Microsoft, AWS, Amazon, they've been talking about that for a long time. And, you know, I'm just looking at consensus, and I'm just looking at the fact that it's 13% revenue growth for the next 4 years expected. And it's like, you know, 10, 11% earnings growth. And
but Street kind of views that whisper numbers are probably 400 bips above where the Street is.
Right.
So if they actually hit the growth, then you don't know Meta here. I think the view is that numbers are significantly underestimating what they're going to be.
Because they don't know how to model the benefits of, let's say, AI across those platforms.
So it's almost like the Street's not modeling that piece. So if you're buying it right here, you're viewing that those numbers are a joke.
Yeah.
And they're going to be like 400 bips above that. If you actually think they're a 13% grower, you're not buying Meta here.
Okay, so right now you have your ETF. That is what it is. It's very transparent. We're going to see what goes on in there. As you think of your coverage, as far as let's throw Apple out of there. Let's talk about Microsoft, Meta, Google, Amazon. How do you rank those? We'll just call them the hyperscalers as far as conviction, as far as...
But Microsoft, Amazon, I'd put IBM and like I put IBM and Oracle ahead of Google, like if I had because of my view where like because Google has like remember still bullish and good, but if I had to like rank order because you have like the perceived headwinds whether you're fighting the goes, you got the DOJ thing, they're still behind the 8-ball and some of those other issues, but I think like number one like. To me, Microsoft has like a clear path to like 550 to 600. Like that, Microsoft and Amazon to me are the two where it's like.
Yeah. All right. We haven't, give me your like elevator pitch on Amazon. We haven't talked about it yet, but.
I mean, to me, it's just like, I'd argue like Jassy for the first 18 months was basically cleaning up. And now.
Some misexecution.
Yeah, and now it's like he's an AWS guy. And I think like the view that as really the cloud leader. I mean, Microsoft is the enterprise, but I mean, from a share perspective, and I believe like their ability to monetize on AI is going to be significant when it comes to AWS. I think the Anthropic relationship is something that is still being underestimated, at least when I talk to customers of like what Amazon is now doing when they're actually they're able to sell a full stack.
Yeah,
you weren't able to do that even 6 months ago. So my view of Amazon is like from advertising to the e-commerce piece, where I think numbers are very conservative out there and you have stabilization from a margin growth perspective. But you're basically now owning what I think, like if they could be successful on this AWS penetration story when it comes to AI, you start to look what could be, you know, $280, $300 stock.
Yeah, so I say a lot of dumb things on podcasts and on Fast Money, but last year, after really taking a hard look, my initial reaction at a WWDC that afternoon was like, there's no there, okay? And the fact that the stock rallied like that over like, let's say a few trading days or something, I think it gained like 12% or something like that, I didn't get it. Now, I get why investors wanted to believe, you know, but I made this comment that I think that Microsoft is going to overtake Apple in market cap, and it's never going to look back. And if you think of it right now, Apple has a $2.95 trillion market cap, and Microsoft has a $3.55 trillion market cap.
They'll be the first, them and Nvidia to $4 trillion.
Yeah. And then 5 also, or no?
Oh,
or
I think, I mean, I believe we'll be sitting here a year, 2 years from now, and we'll be talking about $4 and ultimately $5 trillion mark, because I just think tech more and more whether it's percent market share, it just continues to increase more and more.
Yeah. All right. Before we get to macro, because I definitely want to hit that on the way out, let's do Tesla here. You were on the record, I think, a couple of days ago, suggesting that it's on its way to $2 trillion. Here it is at 1.1 or something like that. They didn't have a robo-taxi event. I don't know why it was being billed as such. You know what I mean? But
they will
some
like
out on
June
the road.
22nd, whatever. They'll do probably. Depends if it's a soft launch or how they're actually going to like.
But they have a couple on the road right now, right? So Kathy Wood, who also has an ETF, a very famous one, she thinks it's going to be the first $5 trillion market cap company. She thinks it's going, over the next few years. It's robotaxi, it's robotics. It's probably, I suspect they buy X and XAI, next year, especially as they're trying to build out robotaxi. It's like, don't look here just yet, look here, and then we'll look there in a year or so. So why is this a $2 trillion market cap, and what kind of time horizon are you thinking of?
Look, I mean, it's my view. I know we've talked about a lot. It's like my view is like this is the beginning of what's going to be in 25, 30 cities. Like I view, despite like the on again, off again with Trump, like you're going to have a very, very green lighted autonomous roadmap, federal, not state, over the next 1-2 years. I think when it comes down to like true level 4 autonomous, true scale and scope, I don't think there's anyone that can match Tesla. Now, look, Waymo, first mover advantage, but Waymo, look, they're $230,000 cars and they're in 4 cities. So I just think like when it comes to the view of autonomous, I believe like 20% of vehicles, when we look out over the next 7-8 years, are going to be autonomous. And I think what's going to happen is that they're going to OEM that autonomous technology to other automakers.
Yeah.
So that's, look, we are in the beginning of this key stage. Now, look.
What do you think other automakers are going to want to license this technology when they recognize what a competitor, Tesla has been on the EV front?
I just think they don't have a choice because, look, they're going to have to offer autonomous in some form, whether it's bronze, gold, silver. I just think they will, just like what's happening from a supercharger perspective with other automakers. I just believe like autonomous is how they ultimately will be the sort of big winner.
Who owns the fleets? Because this is going to be a huge issue. Like if you think about it, I've talked about this before with Uber and Lyft, either the owners or the drivers own the fleets. There are some fleet services, but I think they're less than 15% of the cars on the road. And you have insurance, you have the depots, you have the cleaning, you have the charging. I mean, the list goes on and on. Elon talks about, consumers putting their cars in the fleet. That's kind of high in the, pie in the sky sort of crap. That, this thing is, you just mentioned Waymo in 4 cities. This can be complicated. You know what I mean? Like, look, it's not going to be an easy point from A to Z.
It is complicated. But see, like, it's my view, and like Jensen's talked about it, is that I believe, like, when you buy AGI, see, to me, the holy grail for AI is autonomous and robotics. Whether it's Tesla, UA, or you're saying it's, it's going to be like other players, other robotics players. But I believe that is true. Physical AI is the holy.
And they're going to have it if they can execute, because it's it's robotaxi and it's robotics, and that's how you think. Yeah. Okay. I mean, I get it. You and I, we've kind of gone back and forth about Tesla and Elon.
But I do agree with you what you say about we've talked about the fleet concept. I agree with you. Like when you talk about like they're going to add it to the fleet, and you're going to have your Tesla, but right now your Tesla's part of the fleet picking people up. I think that's...
Yeah, I mean, we're going to need a lot more clarity. And by the way, it's interesting that there's a headline today, or at least a story, that, the Trump administration is looking to make it easier to get to full self-driving. But on the flip side, I think that's probably a little bit of a carrot, because they're going to cut out, the tax credits. And then they're also like ripping money away from the build out of the supercharger network or the charging network, which is also something that I think is a massive headwind.
As well as also like, once these, like in Austin, if one hits a squirrel, it'll be a huge right. So it's like
Yeah.
it's going to be a bright spotlight.
Yeah, I just think I'll take the over on that. I'm not going to take the over as far as getting to 2 trillion because I have no idea. You don't have any idea, and it's not going to be a straight line. I know that folks saw when it doubled late last year, they thought it was going to be a straight line, but there is something called gravity in markets also. All right, let's kind of finish with the macro here because going back mid-April, you and I did a pod. I think it was on the 11th, and
dark day.
Yeah, and everybody was really bogged down with trade and loss of U.S. exceptionalism and a whole host of other things, and our markets were careening, and there's a huge disconnect between treasury yields, the dollar going lower, the yields going higher. Where are you right now? Because it's really hard to think of what the bear case is for the stock market right now. I'm not telling you I'm at all bullish, because if that was the case, you'd go out there and sell the market because, I'm a perma bear, right, Dan? I know.
And people,
I know.
And just at this time, we were talking about people say you're perma bear, but actually, I think that's a wrong label because actually, in a lot of ways, you are bullish on a lot of the technology. Sometimes it just comes down to valuation. So I think it's different. A lot of times perma bear are more just bearish in the whole thing. So
so the point I was going to make is like, okay, so if you think about it, the economy is doing okay right now with, yields where they are. Yep. We have 4.2% unemployment rate. If you think that we're going to get some sort of tax thing, it's going to be front end loaded where you get the cuts and then you get intermediate term, like cuts to spending and stuff like that. That's obviously going to be stimulative. If you have a massive truce as it relates to the trade war and we settle something around 10% or something like that, the situation, you can make the argument with what Israel just did and with what Iran is like hoping to happen, a de-escalation. You could say that Israel really maybe stabilized the Middle East here because they took out Hezbollah. Hamas seems to be neutered a little bit. Right. So there's a whole Syria. Yeah. There's a whole host of things going on. Like, what's the bear case here for the market?
To me, the bear case, like again, it was never like Israel, Iran, oil going to 120. To me, the bear case continues to be the China. I mean, to me, it's all about the China deal.
China growth.
It's China. It's any snafu in U.S.-China relations. It's about export controls. It's about Nvidia in terms of will they be able to sell a restricted chip. Obviously the H20 in terms of that got pulled. In terms of China growth, will there be retaliatory in terms of what that means for Tesla, Apple? Look, I think to me that's front and center. If there was like a bearish piece, it's some snafu and the opposite of a de-escalation happens with the U.S. and China. I think that to me is what I view as like the biggest worrying thing, just given it's still a very fluid situation.
Yeah, and I wonder if you got to go back to like February where Treasury Secretary Bezin, Trump said, we don't care about the stock market. We care about Treasury yields. And so the fact that you still have the 10-year at 4.45, you have the stock market all the way back to where it was in February, you have a weak dollar. I wonder if they start targeting a little bit or being a bit more aggressive with China. It's been my view that they kind of did things ass backwards. They should have gotten the tax thing, and then they should have started with China, you know what I mean? Like
I agree
out of the
with
gate
100%.
rather than our, allies. And so I wonder if they start getting a bit more as we get to some of these deadlines, you know what I mean? A bit more aggressive because at this point, it doesn't feel like we're ever going to have a recession ever again. I'm being sarcastic, people, if you're just listening. And then, it just feels like, this is one of those things where he's kind of emboldened by the taco trade. He does not like that name.
I know. I mean, but it's one of those where that's why you can find Navarro. Like you're going to continue to see Besson because the reality is like they way overstepped. They had to take significant steps back. I mean, they heard that from Jamie Dimon to everyone. Yep. And I think now, even like G7 everywhere else, it's a much softer tone. I mean, like when you see Trump and Carney at the G7 compared to like whatever, when Carney first came like a month ago to Oval Up, that's like it's a different Trump.
Why? So you think he's a bit more subdued?
Oh,
Trump?
100%. Yeah. Because it's the
a lot of low energy, by the way. He likes to call people low energy.
But
it was really
But it was the reality. I mean, that was such a stark difference because he understands, like, where do you get your lumber from? Yeah. Where do you get your steel? So now the realities of everything in terms of going back to Liberation Day to today, they're just going to have to make deals. But those deals need to come because I think there's always that sort of wild card when it comes to Lutnick and Navarro.
All right, Dan Ives, you're not just a tech stock savant. You also got some macro chops there. So we really appreciate coming back
it's
here.
Great.
It's
and
always fun.
I love coming here. And thanks for inviting me back.
Thanks so much. And let's do it again next month.
Definitely.
All right. Thanks, Dan.